Hey, David Wygant, 10 Minutes of Daily Reality. As you know, when I talk something that's new and exciting to me, meaning losing a story, as a lot of you know, that I have been diving deep into crypto and stocks and finance and weed stocks. I love weed stocks. They're fun to watch. It's like watching crypto. A lot of you know that I am mastering a new trait. And for those of you that have been listening, I've had amazing people on the podcast. And the information, whether you're interested in the crypto market, the stock market, or just really learning about life, you can understand by using these patterns in all aspects of your life. Today, I've got one of my mentors on. I found Bennett Stein. I found him on the internet. One night I was cruising the internet and, I don't know, I was looking for a MACD EMA crossover strategy because I was figuring it out. And then there was this Heiken-Aishi, I didn't know what that was, some candle, right? Because I was used to these other candles, and these other candles scared the shit out of me because there was just so many different ones. And then I watched him, and he showed me this thing, well, not literally, but I felt like he was in my room because that's the beauty of YouTube. He was literally in my room that night, hanging out with me in YouTube. And I contacted him. I said, well, look, I'd love you to be one of my coaches. And Bennett, you've taught me some really interesting things. I want to give you some kudos before we, get people your background. You taught me that there's a million systems out there, okay? Some of them are like trying to learn Chinese to me because my brain doesn't work that way. Some of them, my brain sees instantly. So what I've done is I have back tested the ones that my brain sees. My brain sees EMA crossover. No matter where I put those EMAs and how tight they are, I see the crossover. I see it with the MACD and I see it with the RSIs. So I can see certain things. I haven't been able to do some of the other like that divided by thing that you taught me yet, because that was kind of cool and neat. And the VWAP I love because it's another confirmation. I mean, if everything is above it and it crosses over, I mean, you pretty much got some clear skies unless, and this is another thing you taught me, look at all the charts, the 5 and the 10 and the 15 and the 30 and see where your resistance is. Just because it looks clear on the 5, there's a $1, resistance sitting there on the 15 and you just can't figure out why, if it's clear, if it just keeps bouncing off of this imaginary line. So you've taught me a lot, and I've had a couple of really good mentors and you're one of them. So welcome to the show. And how did you get involved in this? What drove you to trading?
Well, first of all, thank you for having me. And I loved your introduction. So if we were to go back, I started like many did with poker. I really just loved playing poker, the psychology of it. And that's where I started. And at the same time, I was trading stocks about 6 years ago using Charles Schwab. And then I moved on to trading Forex, so trading currencies like the USD, JPY, the Euro USD, and those. And then after that, about a year and a half, I think 2 years ago, I moved on to crypto because of the massive volatility and also the access to information that other markets don't really have.
Interesting. Okay, so crypto, and I've told you this, and a lot of my listeners know this. Last year, people told me to buy crypto. So I said, how do you buy it? And a friend of mine goes, you got to buy it from somebody. And I was just like, great, that sounds really shady. Nobody ever showed me an exchange. If you showed me an exchange in a chart, I spent a year learning stocks in 2003. I would have looked and been like, oh my God, I got to buy this thing. I mean, any time you see a line going straight up like that, I'm going to pay really close attention, just like now, this has been, it's been the greatest year to short. I mean, I know somebody who rode it to 20 and they're riding it down from 20. So
that's impressive.
He was, he rode bits and pieces up and took position sizes off, and then finally knew when it was around 19, and there was that one weekly chart where it made a turn. And he's been trading stocks for a long time, and he says, I'm sorry, he says, but when it pukes from the 1 week chart, he goes, I'm not going back in long. He says, that's got way, and I mean, everything was turning down, and he shorted it. The following week he shorted it actually, and he's been riding it down ever since, laughing his way back to the bank. He says it's a double ride. Crypto, I think, is really fascinating to me. I mean, the movements, for those of you who don't know, like today, Ethereum has movements. It's not like the stock market where you have a dollar or two range. Ethereum's had a $10 range today, where it's gone up and it's gone down and it's gone up and it's gone down. And it's pretty amazing to watch and see. Now, you got into crypto, so you were in it last year. What was it
Yeah.
like last year? I mean, from a money making point of view, I missed it. I'm salivating for the next bull run, because now I know. What was it? It must have been unbelievably euphoric.
It was completely different. It was the type of market that you took for granted. And I definitely took it for granted. Now, when the next uptrend begins, I have tools in place to try to make the most profit out of the uptrend. But back then, I was just, trying to scalp Bitcoin and Ethereum on 5-minute charts with crossovers and MACD, just like what you had mentioned. Every trade was a winner just because the market was just quite bullish. It was just harder to lose. And what others I think mention a lot too is not just the excess and bullishness, but also the volatility. We had price swings of plus 25, plus 30% a day, and that was normal for a period of time. And now recently we've seen two changes. We've seen much lower volatility with swings of around 1% to 2% per day, typically unless you have a massive bull run or bear run on the daily. And we also see, as you can probably imagine, the massive bear run from 19,900 down to 5,800. So here we are.
I know, and I look at it as, all right, I wasn't in last year. Okay, if I was in, you and I'd be I'd be on an island right now because I have capital to play with. So
Yeah.
it's like I would have.
If only we had known.
Yeah, no, I have a friend. I have a friend who's done. I have a friend he's not working anymore. He cashed out mostly in December before it hit 19.
So in the upper teens.
In the upper teens, he cashed out.
Okay.
He kept some, and he's kind of pissed that he kept some. Because he realized that he could have kept buying the dips and kept buying the dips. But that's okay. He's made a lot of money. He doesn't have to do anything anymore. He surfs, enjoys his life. I got another friend doing the same exact thing. So I missed it, and it's okay because now I'm putting the tools in place because I do believe there will be some kind of run. Nobody knows when or how or what bottom is, but there's going to be a run, and it's fun to have the tools in place and being able to learn it because hindsight is everything in life. I don't want to look at, and I tell guys, I've been coaching guys, as you know, and everybody else knows, coaching men and women how to meet people. You can hindsight your life 24/7, so it's preparing for the future because these financial, and I always say the more regulations that come in, the more bigger money that comes in, the more we can actually exchange it. I look at Coinbase Pro now, which used to be GDAX, now they're merging, now they're doing it different. The more coins they get on there, the more bigger money will be played on there because they insure it. There's a lot of things that are coming. So a lot of people are looking at the crypto space as negative now because of Bitcoin crashing. I look at it as like, it's okay, it's a correction. And I look at the infrastructures that are being built that will actually allow us to actually make a lot more money because after this massive swing, you just, a hedge fund's not going to want to go and buy, and big money's not going to be like, all right, cool, we'll go buy Nano coin and ride it up 20%. Then we'll go put it back in Bitcoin and ride it down 17%.
Yeah. On that, I would say that the recent movement of altcoins has also not been fantastic, but as many have mentioned, it's a bargain. And I don't exactly know how I feel on this because I never believed that a coin is expensive or a bargain because that's not exactly how the market works. Just because the market goes up does not make it expensive. It's theoretically just as likely to continue going up as it is to move back down to its average. And when something goes down, it's just as likely to continue moving down when it's quote unquote cheap than it is to move back upward. So I always just try to be careful when looking at a minus 25% altcoin and being tempted to buy in at what I think is the bottom. Because typically when you see those very high momentum bearish altcoins that may not have a lot of liquidity, meaning medium to lower volume, typically they continue to move downward. However, that being said, if Bitcoin can begin to recover and create a powerful uptrend, then altcoins will follow as well. And there's going to be a lot of great profit opportunities for trading altcoins to Bitcoin, which would increase your Bitcoin and also your USD value if you increase your Bitcoin as well.
I have a rule, and there's one rule that I've written, and the rule that I'm writing is I'm not holding in Bitcoin until Bitcoin starts to show me something on the daily and the weekly, because in April there was a run. That was a good time to trade the altcoins and convert it back to Bitcoin because you were making double the money, so you were doing well. So for now, I'm sticking with that rule because it makes me feel comfortable because I've worked really hard in my life to make my money. Secondly, as you know, I'm about education. I mean, this weekend, I did 17 hours of video watching. I watched a lot of your stuff. I watched the chart guys. I watched some of my other people's stuff. It's like, I want to put these patterns in my brain so I see them repetitively over and over again. And right now I'm really just paper trading on TradingView a lot because stock market's kind of up, mishmashy. It's, crypto is kind of mishmashy. So I'm not going to miss anything. That's what I think a lot of people don't understand. You're not missing moves. You're gaining the education. And I think it's really interesting. And it's funny that you said that too. A friend of mine just buys because he thinks it's cheap. And he says, buy it now because it's cheap. And I look at him, I look at a chart and I go, this thing is so far under its moving averages, almost zero. You got to go and scroll all the way back to find some support. And the funny thing is the coin came out in December. There is no support, and it's like, so I'm looking at it and I'm saying to myself, I'm glad you think it's cheap, but I like data. You've been teaching me data, and I appreciate that. It's like, I don't care if I think it's cheap. I want to see what the masses, by looking at the charts, think it's cheap. Then I can buy it.
Exactly. I mean, you're beginning to touch on sentiment and looking where the crowd's heads are at, and that's what I typically do when I look at Bitcoin. When I make my price prediction videos, is I looked at the fear greed index that shows us how much emotion is in the market. Extreme fear, buying opportunity. Extreme greed, pretty good selling opportunity. Like your friend who shorted at a crazy, fantastic price. And then we also look at long percent sentiment on BFX, on Bitfinex, looking at longs and shorts as well, because just because you or I believe something is cheap, I like to look at that data to see what other traders believe and try to get into positions before they do. And that's really the goal of trading.
Yeah, and you see, the thing is, all your experience starts to show too. There's a funny thing. I just interviewed a really good stock trader, and she said the same thing to me. She says, people are forgetting the one thing that's important: education. I'll spend money on education because I'm an entrepreneur. I mean, so every business I've had bars, I bought and sold foreclosures, I owned a car business. I had to invest money in everything that I did. And in trading, people just think, well, I'm going to go and take the picks, and this guy, from blankety blankety profit system tells me to buy this, and he's great, and I'm just going to throw the money in there. And the fact is, I throw the money into education because with your paper trading on TradingView, it's phenomenal. You shouldn't touch real stuff until you've actually had a profitable week, where you're actually up, not up one day and down the next, because that's a lot of, because that means you're not paying attention to your rules. So I'm about education. It's being a coach myself. I'm about, taking the time to learn somebody else's brain, pick their brain apart, mimic what they do, but fucking understand everything they are doing. Otherwise, you're going to miss that one thing. And that's, what's great about modeling some of the things that you taught me is that I hear your voice inside my brain.
I hope not too much of my voice.
It's good. It's good, Bennett. It's really good because I have that voice inside my brain because it gets me to trust myself really well. Like those I can't pronounce them. Heikin-Ashi candles to me are really interesting. Now I found something the other day, which you haven't taught me yet, which I found by myself because I play with my TradingView and I couldn't believe it. I was like watching a Tetris game. You know exactly what the bricks, Renko.
Oh, Renko charts. Yeah, that's with looking at price data in a different way. Heikin-Ashi, we have Japanese candlesticks, which is just, the information. We have Heikin-Ashi, which looks at two candlesticks, not one. and then uses momentum to paint it green or red. And then we have Renko, which is, quite different than your regular price chart. But what have you made out of Renko?
It's fascinating. I found it by accident Friday night. I was sitting around, my girlfriend was reading, and I was like, I look at her, I go, do you mind if I, geek out for like another 4 hours tonight, right? And she totally supports it. Because to me, when I start because this to me is a new career. I still have my other business, but this to me is what I want to be doing for the next 10 to 15 years, because I'm at that stage in my life. My birthday's on Sunday. I'm at that stage in my life where I'm older. I want somebody that's always going to be around, and I look at the financial markets. There's always going to be a market that's trending. There's always going to be an opportunity, long, short, crypto, marijuana stocks, who knows, tech stock. I mean, there's always something that's going on. So I want to learn this skill. So the other night, I'm like looking, at my candles, and I'm looking at the line candles and the hollow candles. And then I see this thing called Renko. And I put it on, and I was reviewing a paper trade that went bad because I panicked, and it actually didn't go bad because the noise of the candles jumped me out of it, and I got all nervous, right? Because I saw negative. And I looked at it and I was like, oh my God. I saw the sharp line going up. I saw where I got out, and I saw how much of the move, because I saw the move after it was done. It took the noise. It took the noise out. When it hugs that moving average, there's a distance. I was playing it with EMA crossover strategy and MACD crossover strategy, and I saw less noise and more price action.
Mm-hmm.
I mean, what are your thoughts on it? Because I'm 4 or 5 days into staring at it.
I'm not the biggest fan of Renko, but that does by no means mean that it is something unprofitable. What Renko does is, and I don't know the exact calculation. You can probably Google that, but it takes a lot of noise out of Japanese candlesticks, which some traders might like, and some traders might be able to place into their system. When I've looked at it and try to use other price information with it, I just feel like it obscures too much, especially price tails and close prices. It's not the best with those. And that lack of information is really not fantastic. But for a trader who just wants to eliminate noise and have a rule-bound system, then yeah, it can be a way to go.
Yeah, it's kind of fascinating. I mean, it's really interesting. Like I back tested it on Ethereum. And the funny thing about Renko that I found, there's no 1 minute, 5 minute, it's those minute charts don't really, the 1 minute and the 5 minute in crypto kind of works, but the 5 minute on the stocks can take you back 3 days, because it takes a long time to, I guess, whatever their ratio is. But I found that once it prints those blocks and it's above the moving averages, it's very profitable. But then when I flip back, I make the mistake of flipping back between candles, and I'm like, it's so conflicting. It's very conflicting. For somebody who understands a decent amount of technical analysis, doesn't really want to get into the Fibonacci's, what is your favorite system for somebody who they've got some good background, they understand the markets, they got money to play with, they don't want to lose it, but they also want to learn. What are your simple things for like that person? Because you put out so many amazing videos on so many different ways. Because your technical analysis is great, but what is the simplest thing for somebody? Because I think that's what people need to see so they can start understanding the crypto market and the potential.
Yeah. So if I was to do 4 levels of escalating, difficulty, I would say at the most basic level, we're talking EMA crossover.
Wait, can we pull a chart up so we can throw this on the charts?
Yeah, sure. Let me share my screen with you.
Okay.
Can you see this?
I am. There we go.
Great. So what we have here is just Bitcoin to the dollar on Bitfinex, as you can see here. So we just look at a few things. The simplest of all is probably just standard technical indicators, using them in the way that they're supposed to be used. So if we pull up money flow, also known as MFI, it's given some pretty good signals recently. If you buy when it's oversold and sell when it's overbought, you can see it would have gotten you in here.
Yep.
You would have sold here. You would have sold here and avoided all this. And then when it came back to here, you could have bought right back in, and then it was overbought right here. And now it just went oversold right here. So MFI is really, if I was to pick one indicator for just level one basic, I would say MFI money flow is the way to go.
Okay, so on the MFI, okay, which is interesting, because I looked at one of your original videos with the MFI, and that system that you used to use, it used to make it nice and white at the bottom.
Yeah, that was Crypto Watch. This is Trading View. That's the reason.
Yeah.
But there actually are, for the viewers who want to use the exact MFI that you're talking about, Siegler. This is probably the one that you are used to. It actually paints red and green when it goes oversold and overbought, which could be actually very helpful with backtesting.
Wait a second. Okay, so let's take it back. That's interesting, okay, because the green is alerting me to buy.
Yep.
The red is alerting me to sell. How much of that move?
Correct.
So how much of that massive Bitcoin move would we have got? We're never going to get the full move. We can always get the full move when we go back. But when is that? What number price is that thing hitting the red and somebody starts to bail out, just so they know that they can still make money? Because I think a lot of people get in their heads, Bennett, where, oh shit, if I just took the rest of that, that move, it's like, how did I miss the rest of that move, right? And that was a beautiful move.
Yeah, I would say on the 1 hour, you can see that MFI just really didn't do too well. It did well here-ish when the market was moving on less volatility. But when the market began to really crash, it gave some not so great signals on the 1 hour, as you can see here. However, what you and I were just looking at, the 5-minute, did give much, much better signals. As you can see here, this is one of the better ones that I actually did see. You can see that MFI went oversold right under this bear run here. I mean, this is just the prime opportunity for buying in with 2020 hindsight, right? Mm-hmm. This is a beautiful like 8% X increase that you could have made just using MFI, and then you would have sold right here. I mean, you would have sold at one of these two tops, and maybe you could have bought back in a little bit cheaper.
Wow. Okay. You know what I love here? That the aha goes off. So here's somebody, if you have I think a lot of people, Bennett, that are trying to learn this, they want that. It's almost like guys trying to meet women, right? They want me to write out 10 things they can say and then 10 next things they can say, right? So they have something they have that system. And here's a system, because a lot of the time there's panic going on. Like, you've just run it up, who knows? I mean, it could have ran up even more, but you let it go to all the way when it paints red, and you're still getting a huge chunk of that move. You're still getting beautiful that move.
I'd say you're getting about 90% by the looks of it. If I was to go up to here, that's a 7% increase. So about 7 to 8%. But yeah, so you had asked before, if we were to give a cookie cutter, what do I do? I'm just starting to look into crypto trading. This is level 1, I would say.
Okay.
Then if we were going to level 2, it's something a little bit more complex.
Can these question for other people too? 1 minute, 3 minute, because sometimes I like to look at Bitcoin and Ethereum on the 2 and 3, because those, because you want to, sometimes when you're watching it, you want to time that entry well, and that 2 and 3 minutes sometimes gives a really good signal that things are changing. Will this work on the 2 and 3 minute as well? Or
I can't say for sure, but what I can say is that below the 5 minute, you can get into some a lot of noise. So when I switch over to the 1 minute, it might look a little bit like this, which is just a little bit choppy and just way too much noise, really. So that's why I like to go to a 5 minute where there's less noise and more collection of price data. As you can see, this is really not much we can do with.
No, too much.
And if you do argue, hey, we'll buy the green and sell the red, like buy here and then sell the red, like sell here, that would have been a tiny profit that would have been eaten away by fees. So that's why I like to look at the 5 minute and the 1 hour and the 4 hour. You can also make an argument for the 15 minute. That's also a pretty popular, and it works pretty well with MFI, I've found. So if you look here, for example, this was a beautiful signal right here.
Wow.
This was a great signal as well. This was near the top before we went down to here. And this would have actually held you in the trade if you had used the 15 minute, and then you would have sold somewhere around here-ish. As you can see, we go over. You
can use it to short as well too.
You can absolutely use it to short. Yeah. And if you want to short, you could actually look up to this price area here. This is a pretty good spot to short. So if you're just beginning the market, and you buy here because we're oversold. So if you're just beginning, I would say of all technical indicators that I've used, money flow has been my favorite because it incorporates volume and momentum with nice little crossbreed. That's quite helpful.
Okay. So now for somebody who wants to have other confirmation, right?
Yeah. Um,
So, because we want at least, I mean, to me, what you've taught me, have at least 2 to 3, the more confirmations, the better, check,
Yeah,
check,
the
check.
reason I'm just showing this alone is it's just one individual indicator. Using it just by itself would actually be potentially break even or even a losing strategy. And the reason I say that is if you just buy when it goes oversold like here, and then just sell when it goes overbought like here, I mean that's a losing trade, right?
Hmm.
There are a few rules that you really need to have in place, and I would say that the two main are looking at candlestick momentum and looking at volume. And that actually segues perfectly into, I'd say, level 2 out of these like 4, how advanced of a trader you would like to be. So let me just pull up, looking at something known as price action and volume. And you
Okay.
can use this strategy in direct conjunction with MFI as well. So if you see MFI is oversold and you see bullish indications from candlesticks and volume, then that is, 3 indicators of confluence for you to enter that trade. So when we look at price action and volume, there are 2 main things that we want to look at. Ease of movement. So how easily has price moved to the upside? How easily has price moved to the downside? And then the second thing that we want to look at is how much pullback a move has. So if we were to just categorize momentum, looking at this market from here to here, it looks like ease of movement to the upside is quite high, as you can see here. Ease of movement to the downside is quite low, as you can see price is struggling to retrace much lower, and especially here as well, we get strong candles, but price isn't really able to do much after we spring the stop loss hunt right here, and then we have high ease of movement again and weak ease of movement here, and now here we are. So just looking at that, what we just did is we just analyzed the first step of the 2-step strategy of price action and volume. Momentum is currently bullish. So absolutely theoretically, I'm not saying this is bullish or bearish, but if we were going to use a system, and we might be looking for a spot to buy. So now what do we do? How do we buy once we've identified the momentum of the market? And that's where something known as volume spikes comes in. What we want to do whenever we enter or exit trade is look for a spike in buying or a spike in selling. So a simple way to show that is to look for a trend, and then look for a spot where volume, as you can see with these bars right down here,
Right.
spikes much, much higher than the moving average, that orange line right here. What you want to do is you don't exactly want to call something oversold that has high volume, such as here, because this move, if we just look at this move in isolation, this isn't really oversold. What this actually is just the beginning of high bearish pressure. What we're more interested in is after the market has continued to move down with this price action, and it has had high ease of movement up to this point, we want to wait for a volume spike. And if you can actually see on the chart here, that is a pretty major volume spike, right at 7:35 on the 25th of June. And if you had seen this, then you could have bought anywhere around this price range and targeted the next volume spike. Where does the next volume spike occur? Here. I mean, this is 2020 hindsight, of course, but it just
Right.
shows how to use price action to volume in a simple way that you can learn within, I'd say, a few hours. The basics of it in a few hours, and you would probably sell here. One final thing that I will say on this price action volume strategy, because I don't want to make it too complicated, is price tails are very important. If we actually look here, we can see that we have a very high price tail here combined with very high volume. This is typically a reversal signal. Even though the candlestick itself looks to be moving on high momentum, it's not able to close at this high up to here, as sellers were able to push it down here. And as an additional confirmation, we also get bearishness here as well, showing that the bull move does not have great follow-up after that tail and that bear move.
And the volume's going down too.
Yeah, what we see here is after this volume spike, we just really see a drop off in volume. What that can mean is a drop off in demand. We need high demand in order for price to breach this high and continue to make higher highs. We don't get that demand, so price is going to continue moving downward until we find high demand, or when supply begins to end. So let's take a look at one more just quick example here. we see a major volume spike right here.
Okay.
This volume spike looks to be about 4 times the moving average. And as you can see, price just has a much harder time moving lower, and it just seems to be moving higher as of right now. So that's just, again, the cookie cutter level 2 of how you would look at the market and say, this is what I'm doing, and this is how I'm going to be profitable.
It's interesting, as I'm cruising, I'm looking at volume spikes. So it's like literally, it's like you can see it. It's like the
Yeah.
bears had their last bit of volume spike, exhausting all the sellers. And then the bulls had their last bit of volume spike, exhausting all the buyers.
Yeah, and some new traders always ask me, I don't get it. Wait, tell me, why is it that a spike in buying means that price is going to go down? That makes literally no sense. But here is how I would respond to that. When will an uptrend end? An uptrend is going to end when the last buyer wants to buy, when demand evaporates. And when the last buyer attempts to buy, that's when you're going to see a major volume spike as major buying pressure occurs in an already established trend, where the smart money is going to be buying when the dumb money is selling. And then when we get another volume spike, we see that the smart money is going to be selling when the quote unquote dumb money is beginning to buy, as you can see up to here.
Yeah, the dumb money always buy. It's interesting.
Yeah.
And then the dumb sellers, it's the same way.
They
It's
sell
like,
right here. Yeah.
yep, you see all the people. There are people there who held it since 19,000, and they're like, oh my God, it's getting to a psychological level of 6,000. I can feel it, because they read about it, because it's all psychology. Because now what are people talking about today? 5,400, right? So it's like, it's all psychology. So I can see that. That's interesting, because I've never personally really looked at the volume spikes and to me, I'm all about psychology, but this makes perfect sense. I look at every volume spike down there, and there's a reversal coming soon. So what would you got to add what would you add on here now? Would you add the moving averages now for the next level?
Well, so level 1 was just, MF5 basics. Level 2 is we're looking at candlestick patterns such as price tails. We're looking at momentum, ease of movement, and how much pullback. And then if we were to go to level 3, just to add a little bit more complexity to an indicator, I would say looking at liquidity pools are the way to go. So this would be just step 3. You've been trading for a bit. You understand liquidity and you understand stop loss hunting. So the name itself might sound a little bit confusing, liquidity pool. But all it really is when price goes slightly above a high, or when price goes slightly below a low, and immediately reverses back into the trading range. So let me give some actual visual examples of that occurring. So what we see here is we see an established low, and we can expect that there might be some buying from, they're called dumb money, retail traders that might be buying to try to capture this momentum. Some of them might actually put their stop losses down to here, just right below the previous low right here. Pretty obvious level to do it. And as you can see, price goes down, taps their stop losses, and goes right back up. And it does it one more time. If you look here again, we have support, support again. And many retail traders are actually taught in textbooks and videos to put their stop losses directly below a low or support. And that's what many retail traders did here. They put it right below this low. And I could see that right here with the, with the volume spike that occurred. This likely triggered many stop losses of long positions trying to capture the momentum. And then once the selling had evaporated, it has really no more traders wanted to sell. There just wasn't any supply. We turned it into demand, and that's when price went higher here. So level 3 would be looking at these liquidity pools, labeling like this. So labeling with a horizontal trend line. Just look at this price move here, right? What I'm going to do is I'm going to put a trend line right above. I'm going to put a trend line right below. And I know that when price touches here, I'm going to be hitting many shorts stop losses. And I want to see the price reaction when price hits here. And if price ever comes down to here, what I want to see is the immediate reaction. If you see a volume spike and a tail, just like what we had talked about before, and then price goes up, that's likely a stop loss hunt of hitting these guys stop losses who put them right down here, and price might actually just go higher. So that's how I would do level 3 of just adding in not just price action volume, but looking at it from more of a dynamic stop loss hunting market, where you're basically looking to find areas to screw over retail traders that market makers are doing.
Interesting, because people are also buying in the chop, you know, and it's like if you look at it, it's like it's such indecision, up and down, up and down, up and down, up and down. Am I going up? Am I going down? Am I going up? Am I going down? Am I going up? Right? I mean, it's pure consolidation, figuring out where it's going to go next, and it baits people into it. So you
Yeah.
can see here, all of a sudden, the euphoria. If you look around 6 or 7 a.m., oh my God, it's going to go up, right? Keep going, scrolling there, right? And then boom, it just dumped.
Yeah, then it hunted the liquidity of all these buyers here. We can expect that a lot of accumulation of retail traders is happening. They're buying in. And you might say, well, Bennett, how do you know that? Well, let's look at the volume spikes. Let's just look at the individual. I'm seeing a volume spike here. Price went up. This is a lot of buying. Let me look at the next. Right here. I see lots of buying here as well. And then we see here, lots here, which could be a little bit of selling. And then we see continued volume spikes until we get up to here. This last candle is about a 3.54 times moving average volume spike right here. All of this buying has to be counteracted with some selling if the market's to move higher. And it does. It taps all these all these traders' stop losses right below the low, then goes higher. So yeah. And if we even look here, the volume spike that you and I were talking about 5 minutes ago, we can see that price has already made a bullish move that quickly after going right below this low here and now going higher, which is quite interesting.
Yeah, it's interesting to do it this way. See, what you're doing is you're trading price,
Price action and volume.
Yeah. Yeah, you're not looking at other things. You're doing price action on here, which is a way a lot of people, a lot of people that I know that have been successful there, they could care less about lines on the screen. They just do support and resistance, and they find their channels, and what about, for people that need a little crutch? Because I think this is I'm seeing it because you've taught me a lot, right? So now I'm seeing it. What lines can we put on the chart that give people that extra little crutch that they could have that will make them feel safer? Because I think the lines on the chart are really interesting. To me, it's like a line on a chart signifies that somebody's holding your hand. It's a very weird psychological thing, and I try to break down the psychology of all this stuff. It's like, because you can see it bounce off of the moving average over and over and over again, and it's really interesting. Now, the trend line is the price action is actually more important, because that's where you're getting your bigger moves. Because I look down there and I see, oh yeah, I see the double bottom right there at 60, 70 before it had that ginormous move up, so that's a far, that's prepping you for a much bigger move,
Yeah, and also just to apply what you and I just talked about, if I disable volume, you can even look here what happens. Price makes a bullish move upward, and then actually looks to immediately reverse quickly back downward. To any retail traders who tried to buy into this market may have gotten stopped out here. Maybe there are more stop losses here, but some of them may have market sold here, and then the market moves higher. V-shaped reversals really rarely happen. Some traders just believe that the market goes down then up, but you get these kind of in-between periods of what you said, choppiness, where price just goes up and then goes down and then goes right back up. And where I'm going with this is that whenever you see a spot to buy and you see prices up here beginning to make that V-shaped reversal, one of the best things that you can actually do as a trader is to wait for that pullback and then buy this pullback here when many traders are actually just selling.
Yeah, I can see that. That's like that's because I saw it because the double bottom sitting there too. So
Yeah.
that's
Also here, we get a volume spike. Some traders might panic and sell here, which, that's something you could do, but you could just wait for the pullback and then sell the bullish pullback that you see here. And that's one of the harder things to do in trading, but that's really what's going to, maximize your gains, minimize your losses, is to be a little bit more patient when you make your trades.
Yeah, I think that's the big thing, that I've learned, and you've taught me a lot, is don't hunt. It's funny. It's like, it's almost the same theory that I run in life. If I go out and I teach a group of guys how to connect with women, I always tell them, don't hunt women, allow them to come to you. right? So if we go to Whole Foods, there's that Whole Foods in downtown Chicago. So the Whole Foods I'm talking about, right? It's
Yeah.
right. So I've gone and I've taught in that Whole Foods, and I always tell guys, let's just go when the market opens, using that same analogy. Let's go during peak times, 5:30 to 7:30, and let's sit there and eat and allow it to come to you, because there's going to be moments of choppiness where nothing's happening, and then all of a sudden, there's going to be a bull run of women come in, and you could just start having communications and talking. And it really is psychology at its best. I mean, I just see this I'm really looking at the psychology of it and trying to understand the most of it, because once again, I'm not a perfectionist. I am somebody who I crave to be successful in everything I do, because it's important to me and it's my track record. But it's really interesting to see, without the lines on the chart, this wow, you went to the market during the choppy time, and if you allow the market to come to you, the opportunities are there all day long. There's never a day where there's not a couple of opportunities, to make money. So it's almost like, let it come to you, and it will.
Yeah. I mean, emotions is really 90% of trading. And when I say emotions, I know that's an umbrella term, but that includes patience, which is holding on to your, winning positions when they're winning, like something like this, not just selling because you're at a profit when the market's here. Patience, and then just being aware of your fear and being aware of your greed, because it's tempting. And if I showed you this chart here, this is just, it's tempting to just try to drop out of the market, because when you see this, what's the first thing that you want to do,
Oh,
right?
I want the bounce.
I mean, personally, I
Yeah.
think many traders are probably going to think that this is going to just continue moving lower. I mean, if we removed our 2020 hindsight and what you and I have learned together, but this looks quite bearish. But if you just can control your emotions and just try to see, if there's any follow up with this bear move, and you would see here, you see as we go here, no, really just not much follow up that we see. And what I always like to ask myself is, right when we spring below a low, how much supply do we really have? And when I say supply, that's just another term for high selling, the opposite of demand. We're not really seeing a large amount of supply. We're not really seeing a lot of energetic selling once we go below the low. And the reason that occurs is the high selling that occurs here with the stop loss hunt. And when we go to that lower price level, we really don't find too many traders who want to sell at this price level. If anything, they want to buy it right back up. And that's why we go higher.
Well, you also see, if you go back, you also see that it broke support.
Yes.
It broke support. So now you wait for the entry is when it, when it breaks resistance, which, support used to be. So, but that's how that's how you've trained my brain from watching the videos. I'm looking at like, wow, there's clear support. It broke it. So now I'm looking for the next thing, because if you look at it, what comes down always goes up, and what goes up will always come down.
Yeah, but you do need to be careful with that mindset, because you
Okay.
don't always want to fade. It's called fading a trend, which is the opposite of buying or selling a breakout. Sometimes when a new high is made, we actually want to buy, and sometimes when a new low is made, we actually want to sell. Sometimes we get these stop loss hunts, but like I've said with many of these, sometimes we really don't. So if you had put a limit sell order like here, I think you and I can both agree this would be a horrendous spot to sell, right? But you
Mm-hmm.
might say, wait, we're going above so many recent highs. This is going to have a lot of stop losses, which it does. But this high demand is not really something we want to sell into. Rather, something that we do want to sell into is when a move just has no follow up. Once it goes below a lower, once it goes above a high, we go below this low here, as you can see here, and this was the lowest price that Bitcoin has gone in a very long time. This price exactly at around the 5760 level. And as this happens, this is just maximum fear of traders who believe that the market was just going to go much, much lower. But if you had waited even like 10, 15 minutes, price would have been here. And if you know price action, then you would know that this is probably a stop loss hunt. Price should not be here if the market's going to continue moving lower. That amount of demand wouldn't really be able to take place, because there'd be so much selling that price would have a hard time reaching here. wouldn't it?
Yeah, and there's a lot of entries. I mean, even if you
All over.
waited all the way up to 59, which was
You
the
could have
last bunch of highs,
you could have just bought here.
59.20.
Yeah, you could have even bought there.
Yeah, I mean, there's a decent amount of entries on this because then after that, it really, then you have to go to the next level, which is 6,000. I mean, there's a couple of levels you're crashing through, but um, you're crashing through a lot of things, right? This is a big move.
Yeah, it definitely is. So that's what I would just conclude again with your question 20 minutes ago of the different kinds of levels that I would answer your question to different kinds of traders. Level 4, the most advanced. If I was to say what blanket strategy would I recommend to a trader who's been doing this for years? In that case, I would say that I would look at sentiment. So I would look at long and shorts positions. So that's going to be that's the percent long versus short. But this is longs and shorts. Green lines are longs, red line is your shorts. You'd be looking at this and trying to buy before others buy and sell before others sell. So that's one thing I would do. I would also recommend the Fear Greed Index, which
I've never seen those.
yeah, I can link it to you. It was on my most recent Bitcoin price prediction video where the fear greed index moved to extreme fear, meaning that many social media sites, Google Trends are showing extreme levels of investor fear, which typically is a very good sign to buy back into the market. Funny enough, so that's one thing I would look at. I would also look at order flow as well on TensorCharts.com.
Let me ask you a question on this
For
because this is
advanced traders.
interesting. Where do you, to me, from videos and everything that I've learned,
Yeah.
it's about the triple confirmation. So if I'm using that, where's my other confirmation? I see the lines up there, and I see this. Now I see the volume and I see the price action and so forth. But where else am I getting confirmed by that last indicator we put up there?
Yeah.
So
So,
people
I would
understand it.
say, yeah, I would say I made a video called Bias Trigger Execution where I talked about the triple threat of using a bias indicator, a trigger indicator, and a execution indicator. And for those terms, for those who didn't see that video, a bias indicator is basically just looking at sentiment, looking at order flow, looking at fear and greed in the market. It's looking at where the crowd's head is at, looking at it from a psychological perspective that I know you like to do.
Right.
Then we go into trigger. So trigger indicators are MFI, EMA crossover, any kind of technical indicator that gives you an indication to immediately buy or to immediately sell. And then we have execution indicators. So bias indicators give you do I want to buy or do I want to sell? Technical indicators give you a spot of when should I buy, when should I sell? And then finally, execution indicators answer the question of where do I buy, where do I sell? For execution indicators are Fibonacci's, support resistance, pivot points, volume profile, any type of indicator or analysis that gives you an exact level of support or resistance. And then that's where you put your buy or sell order at.
Let's
So
put one up for people because Fibonacci, for some people, I know that when they try to listen to it and explain it and move the things around, how about something that just for the sake of people who don't want to go and draw the lines themselves,
okay.
and have the automated system draw it? Because you taught me Fibonacci's and I understand it, and do I do it to the wick? Do you not do it to the wick? And I've been playing with it and I get it, from the session that we did. But I know me personally, especially in the technical day that we live in right now when computers can do so much for us, what is that indicator that gives us that prints out on the screen for us? So as a trader or new trader or somebody that really wants to understand better, they can actually see it pop up live.
On TradingView, there are a few indicators. If you just type in here, if you type in Fib, you're going to find tons of different auto Fibonacci. Like this one is decent. What the Fib, this one and this one. These are going to do automated Fibonacci drawings. That is an option for you if you're interested. Auto Fib here does exactly what you think it does. But I found that still the best way to do Fibonacci's if you want to go that way is to just draw them yourself and learn how to draw them yourself.
Okay.
And if you can learn the rules of Fibonacci's and how they work and why they work, and then just begin to practice using Fibonacci's by hitting this button, what we've talked about, just go to a random price point, close your eyes even, and then just begin plotting Fibonacci's, and see what works, see what doesn't work, and just kind of play around with the price data that you can for this year. But if I
Or
was,
or just go in a live market and don't think about trading that day and just kind of hang out all day
yeah,
long and watch it.
that's another way that you could practice as
Yeah.
well. So one thing that if I was just trading on my own, how would I approach this market? Well, the first thing I would do is recommend you use magnet mode. So this is just going to snap on to the lowest value and the highest value that we have here. That can give you some help in automation. So I'm going to snag this lowest low that I see here before this bull move. I'm going to snag this highest high. Now, typically I know just from rules of Fibonacci's that high momentum trends typically retrace to around the 38.2, and average to weaker momentum trends typically retrace to around the 61.8. So what we see here is that the 38.2 has barely been touched, if touched at all, and then price went higher. So typically this is a pretty good sign. What we may see with looking at this kind of Fibonacci is either a move slightly down to here and then up, or we could just see some consolidation then up. Of course, I'm not saying this is bullish or bearish, even though I'm thinking this is slightly more bullish than bearish. But that's just a rule. You identify the trend, you identify the trend momentum, just like what we had talked about earlier with ease of movement and how much pullback a trend has. High ease of movement to the upside, weak ease of movement to the downside. So that would mean that we're more likely than not to continue moving upward. And you would
Yeah,
just continue.
that's a big move. That's almost a 98%, 92% on that Fibonacci chart.
Yeah, yeah.
That's
And
that's a big move.
this one would have worked as well if you were to just isolate, snap that low, snap this high before any of these moves happen. You can see that price is unable to really make any ground past the 38.2 here, and then price goes higher because this is high momentum. So that's just a intro way to look at Fibonacci retracements in the market.
Yeah, look at it, and then you can just do it again. So then you would do it again from the next one, which we did.
Yeah,
So you
would
just
do it
keep,
from here to here.
yeah, you just keep going, and magnet mode does that. Yeah, no, that's interesting. So once again, you're not putting it's interesting watching you do it, right? Because you've done so many instructional videos, and I love knowing that you're the price action. You don't use the crossover. Personally, you don't use EMAs, do you?
Not so much. Let me just for the sake of us talking about those, let me just pull up two moving averages, and we'll just use like a standard, let's do 1321. That's one popular way we can use it. We can just look at some of these signals that we have here. The coloring of these though is not fantastic, if I do say so myself.
No, I always blur them up more.
But yellow is just a terrible color for trading view. Here. Okay, so if we just look at the fast versus slow EMAs, just for talking about it here, the fast EMA here is the blue, the slow EMA here is the orange. So a few times that this would have worked really well is high momentum moves, such as here. You could argue that you would have bought in here when the EMA crossover occurs, which it occurs right there, right before that big move. However, if you had done that, you would have missed out on other price opportunities to buy much lower. And another way that you could have gotten in here is you would have bought in when the EMA crossover occurred here, as you can see, and you could have sold right here. But what I've found with using a ton of EMAs and just back testing is that they're not really my favorite indicator for a more advanced trader, for a trader who knows price action, knows volume. These aren't really necessary because all they're showing are just weights of recent candlesticks, more weighted than historical candlesticks when we look at EMAs, and looking at the momentum of candlesticks over time to try to find a crossover. That's all it's really doing, picking up on high bullish momentum, picking up on high bearish momentum. That being said, though, they can still be a fantastic tool to use, because you could have even sold here and then not bought back in at all until about here or here. So to answer your question a little bit shorter, I would say that, do I use them? No, I do not use them. But I still do recommend using them for anyone who still wants to gauge momentum. But if you can gauge momentum on your own, then by all means, do it on your own without the EMAs.
Yeah, I think momentum on your own is definitely, the more that I'm learning, the more I want to gauge the momentum on my own. But it's definitely, it's training your brain. And I think I know how I've been learning is that, the EMA crossover and the MACD crossover, they kind of give me a sense of safety, and I'm not getting, you're right, I'm not getting the volume spike. I'm
No.
not getting it at the time that I should, or maybe I'm paying a little bit more, but to skim or to just take a chunk of the market out, I'm okay because I'm not going long in anything right now. So I'm okay with it that way.
Yeah, and one more thing why I personally don't use EMAs is, if I wanted to, you could just program a bot to use EMAs and it'll probably do it better than you or I ever would, because a bot doesn't have emotions. And if EMA strategies really do work, then just program a bot to do it, right? However, it's actually a lot harder to program a bot to trade price action volume. And really the only way to do that is to use machine learning, right? Because you actually cannot tell a bot buy when this occurs, volume spike, sell when this volume spike occurs, because it might be doing some things that you don't really want it to do. It might just begin selling here and then selling here and selling here and selling all over here, when a human would have not sold here at all because of this bullish momentum that continues to move upward, and they maybe could have sold around here at a better price. But a bot can't really do that. So just to that point, if you're going to use EMAs, I mean, why not just use a bot?
I mean, the bots are interesting. I mean, I've got the AI running.
So do I.
Um, and I'm down a little bit in it, but I mean, I think you told me you got to give it a couple of days.
Yeah, and also, I heard that from a few people. That's mostly because if I just pull up the watch list here of how, I mean, you're going to see a lot of green right here, but these prices have moved a ton down. Just about all altcoins are at major all-time lows, and because that occurs in this very bearish market, that's why some traders have been losing money. One thing that I did, which I found was really helpful, is I just disabled the AI for like 2 days of high bearishness in Bitcoin. Let me just zoom out and show you when I did. When Bitcoin was making these moves here, I just disabled the AI and then I just put the AI right back on when we got to here. So I didn't really want to use it around here because when Bitcoin's crashing, when Bitcoin's not doing well, the AI is probably not going to do well because the altcoins won't be doing well, right?
Right.
So it's all your kind of strategy, but I actually have the AI running right now. I could even pull it up. This is what I've gotten so far. I am currently at a 0.88%. This is all my strategies. Currently at a 0.88% profit here, a 1.65% not profit here, but I've already made a 1362 profit here off of a really nice trade that it made. So I mean, today it's been doing its job.
Yeah, it's interesting. And then the bots, you have to, because there's a lot of bots out there. You've got to program that bot.
Or buy someone else's programming. Yeah.
I mean, and then the bots are. I mean, do bots actually make you a lot of money? I mean, if you program it the right way, or is it
Well,
just?
that's a hard question for me to answer.
Uh,
'Cause some bots are going to make money, some bots are not going to make money. A pattern that I've noticed that you can probably expect as well, that high frequency trading bots that are only available to institutions and market makers tend to make more money, a lot more money than retail trading bots that just say buy when this line crosses over this line, right? Because the power of an HFT with trading within milliseconds and with using its order book algorithms, it's going to be making a pretty nice profit. So really, the best defense or offense or whatever against those HFTs are trading like this: human trading, psychological zones of fear and greed. Fear, greed, fear, and also using machine learning AI. And that's what I found has been the most helpful bot experience for me, because I just don't really find technical analysis bots that helpful. So that's my answer for that.
yeah, I don't want to program a bot because then I'm missing out the experience, from learning it. And the fact is, it's like if I'm still learning things, how can I program it? So it's kind of like the end user, or I could use somebody else's strategy. But once again, using somebody else's strategy, it's like the shortcut generation. It's like everybody wants that shortcut, and I think there is no shortcut
No,
at
there.
all. And I think that's the big thing. It's like I don't want to, I know as a person, I'd rather take my lumps. I'd rather sit all day long on my sofa, with my windows open and learn it and put in the time and the patience and the energy behind it. And I believe that in all aspects of my life. And that's the reason why I've built so many businesses in my life. So this is no different. I did the AI because you suggested it, and it's just kind of fun. I got a little bit of
Yeah.
money playing in it, and I think I'm down $90 from the horrific weekend. When it went, I think Thursday and Friday it was bad. I lost $92. It's like not a big deal, but it's interesting to have it as another tool in my chest. And that's the way that I look at it. To me, it's like this is what you're teaching and what you teach in your community and what you're teaching on YouTube is for somebody to actually go and do this. And that's there's no shortcuts.
No, there really aren't. The AI is very helpful, and I will agree with you there. But typically, it tends to lose a little bit of money in a bear market, or lose a fair amount of money in a bear market, and then make money in a sideways market and make a lot of money in a bullish market. That's just how the AI works. But what you really can't misplace is your own experience with trading. The issue with human trading, with just trading on your own and looking at price action and volume, is that A, it can be very subjective, and B, more importantly, emotions. You have emotions of this, you have emotions of that, of buying and selling, of taking profit early, holding on to a losing position, and such as that. So what I actually do myself is, I'd say about half of my capital is with the AI that I switch on and off, depending on the market. And then the other half of my trading is just my trading of Bitcoin and Ethereum to the dollar, that I've found has been just using the strategies that you and I talked about today. Really, all four of those kinds of levels of strategies are the stuff that I use on a daily basis. Um,
Are you trading on? Are you doing GDAX?
yeah, well, it's Coinbase Pro now.
Yeah.
Yeah, and I think they changed their name to Coinbase Pro because of the brand recognition. Some traders were kind of confused why Coinbase and GDAX, they seem like two different entities, but they're really the same thing, you know?
Yeah, except the fees on Coinbase are out of control.
Yeah, well, they're the same. They're the same company from my knowledge, and that's why they renamed them Coinbase Pro. But yeah, the fees on Coinbase are leagues higher than the fees on GDAX. So
Yeah, it's interesting. It's I've just moved everything over to Coinbase Pro off of Coinbase, and because I'm kind of gearing up because I've learned Ethereum's moves, and you could be skimming Ethereum and Bitcoin a lot. Litecoin as well. Litecoin doesn't move as much, but and I know they're going to do Ethereum Classic on it soon as well. To me, it's a safe exchange. The altcoins are interesting on Binance, but until there's a bull market, those altcoins. I mean, I've done 10% gain one day and 12% that gave back the next day. They're all over the map.
yeah, that's why I just use an AI to trade them, for diversification and just for it to not have any emotions. Because when a coin rises like 10%, I don't think that I'm going to keep my emotions in check and not, sell, or even worse than that, buy into a coin that just spiked up 10%. And guess what? I just bought the market top. So that's why I just like to trade high liquidity coins, such as, yours truly, Bitcoin to the dollar, and Ethereum as well. And I leave altcoins for AI trading, just to minimize those emotions that you had highlighted.
It's interesting. You also get filled, on GDAX or Coinbase Pro. It's not like you're going to get filled in your order. You can trade those altcoins. I mean, there were times that I've traded the altcoins, and I'm 5-6 minutes in, and I'm like, man, it's like, is this order ever going to get filled? And that's scary if you can't get filled on the way up, because the volume is so low, right? Imagine on the
Yeah.
way down.
Well, the good news is that Binance offers the same fees for taker and maker, meaning that a market order has the same exact fees as a limit order on Binance, which is awesome. That's why I tend to use market orders on Binance, because I'm only paying 0.05% if you
Yep.
use BNB. And sometimes I'll use limit orders, but it's typically market. If we switch over to talking about GDAX and trading Bitcoin, I actually find that that's a much harder market to get filled, because when you place that limit buy order, other limit buy orders might be ahead of your order. So you might not get filled before, the market already moves upward.
So are you doing market orders when things are moving upwards?
Not on GDAX, because GDAX has a 0.3% market order fee, which is crazy. If you buy and sell one trading position would be 0.6% fees, right? One for buying and one for selling. And 0.6% for a trade is absurdly high. I can't take that kind of trade and expect to be profitable over time. So some things that I do that I've begun to do is not just use GDAX, but use Binance BTC USD to Tether. I know there's a lot of mistrust in Tether, but I have been willing to take the risk of trading BTC USD T on Tether, because it's just I'm getting my orders filled.
Yeah, interesting, because I have not done many orders on GDAX at all, So, um, in Binance, I've just been learning it. So that's, yeah, the Tether. Why does Tether have such a bad reputation?
Well, there are a lot of issues with Tether, and I'm not going to get into all of them, but they're they're really, from my knowledge, they're really printed, whenever, to try to mirror the U.S. dollar with a 1-to-1 ratio. And the reason why they do this, why Tether even exists, is because USD fiat trading is not allowed on some exchanges such as Binance. Poloniex does not allow USD fiat. So because of that, the easy workaround is just to make an asset that mirrors the dollar. But again, the big issue with this one, and you could easily say this about many cryptos, is that it has no tangible backing, and that's what puts a lot of fear into a lot of people's minds. Is that all of a sudden Tether could be devalued to zero, and those USD tethers that you own could really just be useless. But that's a risk that I have been willing to take. I don't like to be in Tether too long. I just use it to increase my Bitcoin by like buying here, selling here, and then buying back in at a better price to increase my Bitcoin overall. But that's the main reason. It's that lack of trust in the printing agency that prints it, and also just it's not really tied to anything tangible. Whereas USD fiat does have a tangible value. You can hold a dollar in your hand, but you can't really hold a tether. But I know a similar argument could be made for Bitcoin, but Bitcoin does have more use than Tether.
Okay, so one final question, because I could talk to you for hours, and I'm sure a lot of people got. Where do you see this all going? What do it's the more I research it, we all know 90% of the altcoins are going to be non-existent in 5 years. I mean, it's obvious, I mean, it's just, that's the way it is. New technology, the big names take it. I mean, there's some really good big names out there. Where do you see Bitcoin? Everybody wants to know where Ethereum's going, where the market's going, and when will it hit 1 trillion? Because if it hits 1 trillion, the rise of them, there's so many videos that are out there that speculate. And to me, I've never been much of a speculator. And it's funny, Bennett, when some person will call me up and go, man, I met this person and they didn't text me back, and can you tell me what they're thinking? And I'd be like, well, give me their phone number and I'll call them up and I'll tell you what they're thinking. I'll ask them directly, because I can't speculate. But yet the market, to me, this is like fantasy football. If you play fantasy football, it's,
Yeah.
you're right. It's like the NFL season. We speculate. What are the Bears going to do? What are the Cubs going to do? Is Mitch Trubisky going to throw 30 touchdowns next year? Can you get him in the 11th round? Where do you see this coming in, and what do you think, if because to me, I'm all about regulation, because I think safety, in regulation comes safety for so many people to come in and play, because I think the more people that come in and play, the more the market rises. But what are your feelings on this?
Okay, so just first to tackle regulation and the argument of regulation. I am more against regulation. I don't exactly want. I think it'd be very hard to regulate anyway, but I just don't really want Bitcoin and Ethereum to be completely regulated. I know that there's a big argument for regulation of ICOs, because some ICOs can be very scammy, can cheat people out of money, and just some of them are just not up to much good. But with the legal debate, I would prefer crypto to remain unregulated, and just to and you might say back, well, then you're going to have hacks, you're going to have lack of trust, a lot of people not getting into crypto because of that reason. But I think that as Bitcoin and Ethereum become more popular, better exchanges will pop up with better security, and as it becomes more streamlined, I think that the private nature of Bitcoin and blockchain overall, with the anonymous transactions, I think that that's going to be the centerpiece for why it's here to stay. I mean, you could also argue it's a digital currency. You can exchange it for things, which is true. But I see really that its role is in the anonymity. I think I butchered that word. In anonymity here.
No, I'd butcher it too, so I'm going to
Yeah.
let you run with it.
I find that that's a really important point for crypto remaining unregulated. Now, for where do I see this thing in like 1 year? Where do I see this thing in a decade? Uh, as you mentioned with the speculator, of if a guy calls you up and says, "Hey, this girl, she didn't text me back for 2 days. What does that mean? What does she want?" You had said, "Let me call her." And same with this. If you ask what's going to happen in 10 years, I'll say, sure, give me a crystal ball.
Exactly.
Only the best that we can do as traders, and the best that we can do is avoid absolute speculation. So that's saying it has to go to a trillion, or it has to go to zero by 10 years. Instead of thinking in absolute terms, think in probability, which I know that could be kind of hard. But in between that, Bitcoin's going to die, and Bitcoin's going to go to the moon, and anyone who's not on the rocket ship is going to become a beggar on the street. I'm somewhere in between, where I think that there is a scenario that can occur in which crypto could become completely devalued all by itself, and blockchain stays, because companies are already implementing it. It can't really go away. The technology is here. That is a possibility. And then the other possibility that I am more confident in, and I believe with a higher probability, is that crypto is here to stay, and that the majority of the altcoins just either die off, or their companies disband, or run out of revenue and just can't operate it, or the public loses trust in some altcoins. And you get a few major coins that survive, just like the internet tech stocks. We get
Yeah.
Amazon, Apple, you name it, Microsoft, and we get Bitcoin, Ethereum, and Litecoin. So I think that going in 10 years, there's going to be a phenomenal shift in Bitcoin and blockchain. Totally. If you were to ask, do you see this as something that's going to be transacted as a currency in 10 years? I would say in the United States, no. In the other parts of the world, absolutely yes. Uh, Bitcoin could be a great way for a country with high inflation, or a country that is in civil war, or anything like that, to tie to something that has actual tangible value, um, um, like Bitcoin. So that's where I see the use of it. And I would say, overall, to answer the question in just a one sentence, I would say that I'm more bullish than bearish, and I'm hoping that we can get this technology to become much more popular in the coming years.
Yeah, I'm more bullish than bearish. I mean, I just think the bearish right now is just a cycle that it has to go through, and I look at it that way. It's like whatever the low is, it's going to be, before it goes up. You look at any market, markets always go up and they always go down, and housing market, stock market, gold market, currency market. I mean, everything changes. So thanks. I mean, this was a great, you've always been a wealth of information. Tell everybody where they can find you, because you have a great YouTube channel. You've got a Discord channel. You also are one of the few people that actually, and this is something that great for all that you want to learn, you can watch one of Bennett's videos and you look at the replies underneath, and there are questions. They're good questions. He'll answer the questions underneath. So you actually have a lot of interactive learning. He's a great coach because he'll walk you through and give you good TA analysis, and really take you and really help you formulate what your trading plan can be. Because as all of you know, there's so many indicators that are out there. I mean, there's just so many different viewpoints on it. And to me, I'm going to continue using moving averages right now with what I learned. Even what I learned today, I'm now going to probably pull the moving averages off, draw some trend line, draw some lines in there, support and resistance, and then put my moving averages back in, because that's how my brain works. Because I've been moving average studying for 4 months right now, so I don't want to vomit it out, right? Yet I still want my crutches on. But you can find through all his videos and the wealth of information so many ways, and you can reach out to him and you can schedule a coaching call with him. So Bennett, how can people get in touch with you?
Yeah, so I have my YouTube, which is Bitcoin Trading Challenge, and that's where you can find all the videos that David and I were talking about. And if you want to join my Patreon, what that is for $1, $3, $5, or $15 a month, You can suggest a video, you can vote on a video, and you can ask me any question that I will answer within 48 hours. Also, if you want to ask more of a simpler question, what you can do is either join my Discord chat, where we have 2,000 traders who are talking about different ideas, different charts, and that can be a great way to use other traders to learn. To get to that Discord, all you have to do is just click on any of my videos, go to the description section of Discord, and description section of that video, and then click on the link to the Discord, and you'll be right in. And then the last thing that you can do, what David mentioned here, was if you want to just ask a simple comment on one of my YouTube videos, by all means, and I might get to you.
Perfect, Bennett. Hang out after the call. And for the rest of you, yeah, I know that, I usually promise a 10-minute podcast, but when I have somebody on who's a wealth of information, hopefully you have learned a ton of stuff, because I always do, because life is about learning, life is about sharing. And the beautiful thing about trading is that you can actually share your pick with somebody and share a chart with somebody, and nobody's stealing it. They're actually making money with you. And that's one of the greatest, to me, one of the reasons why I'm so attracted to it, is because you can sit around with like-minded people who are supporting you to make money. Nobody's stealing anything, because if 100 people are doing the same trade, it's going to move up a little bit and everybody's going to make money together. So the principles behind it is all about creating wealth. For the rest of you, I will see you for 10 minutes tomorrow. Hopefully it'll only be 10 minutes. I'll probably do something alone, so it'll probably be 10 or 7 minutes. And for the rest of you, let me know what else you want to know about the cryptocurrency market. We can maybe bring Bennett back on. I'll see you all later.
Thank you, David, for having me.
You're welcome.